Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. Today's interview, Anthony Power and I are pleased to welcome Jason Les. He's the CEO of RIOT Platforms. RIOT actually just came out with their Q2 earnings yesterday. They're the first of the publicly traded Bitcoin miners to report this quarter. We've got a ton of questions to go through with Jason in today's interview, but before we do, please take a second, hit the like button, you guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below if you're currently holding shares of RIOT, what you thought about their Q2 results, and your outlook for the back half of the year. Now with that being said, let's get into today's interview. Okay guys, so that's right. Hot off the heels of our trip to Nashville, we've got Jason Les, the CEO of RIOT Platforms, in the studio to join us talking about Q2 earnings. Now, Jason, you guys are the first of the publicly traded miners to report. Super excited to go through these numbers. But before that, we really appreciate your time. And we wanted to hear how your experience was in Nashville.
I think every year I go to the Bitcoin conference, it's, in my mind, the new best Bitcoin conference ever. Nashville was amazing. I loved the downtown area. Everything going on was so close. You'd see people on the street. All the events were just really close to each other. I love that whole atmosphere. And let's not forget what a Bitcoin-friendly state Tennessee is as well. All of the lawmakers, and you saw many of them on stage, talking about the value of Bitcoin, talking about wanting to make Tennessee a part of that. So that, combined with the other very prominent speakers that we had in the conference, the opportunity to see so many people in the industry. This was actually the first year that RIOT has done a booth. In the past, we've kind of taken the position, hey, we don't have customers, maybe this isn't something we need to do, but we dove into it this year. We got a big booth, we set a lot up. We have team members staffing that around the clock, and it was a great way to do some business development, and then meet people who were RIOT shareholders or interested in learning more about RIOT and Bitcoin mining. It was a lot of fun. So now we're looking forward to next year, particularly going to Vegas, home turf.
We're looking forward to Vegas as well, even though it's not home turf. And the thing I really liked about your stand was you had both of your facilities actually mocked up in model format, so you could see the full vision for both Rockdale and Corsicana, which was great. Now, Jason, you said you bumped into a lot of notable people. I understand Trump's son and Tucker Carlson crashed your guys' bus ride to the restaurant, and you also had a little bit of time with Trump. So I just wanted to see from your perspective alone, what's kind of the consensus or the feeling from the political landscape right now?
I think the consensus is Bitcoin is exploding as an issue that lawmakers are aware of. We've dealt with a lot of challenges in the public policy space over the last few years. And it's actually why about 2 years ago, we at RIOT decided, hey, this industry is under heavy attack, and by extension, our company, and we need to invest in protecting this industry. Now, that's not an expense that necessarily returns dollars to the company, but one we felt necessary to protect the long-term interests of our business and other Bitcoin businesses and Bitcoin as a whole. To give everyone a sense of what we've been dealing with for the past couple of years, we've had the Biden-Harris administration multiple times now, multiple years, propose a 30% tax on energy use of Bitcoin mining. That would be crippling for Bitcoin mining in the United States. We don't think that's a good thing. We have dealt with very hostile banking regulators who have pressured banks not to do business with companies that are involved in Bitcoin and cryptocurrency space. We've had the Energy Department try to capture our confidential information around all of our energy agreements, and in fact, they wanted to make them public on the internet so everyone can see. What are some other examples? There's been a number of negative bills proposed in Congress trying to push for a central bank digital currency, trying to classify developers as money transmitter, trying to classify developers of wallets as money transmitter business. There has been a whole of government attack on Bitcoin and Bitcoin mining. And finally, I think the progress that collectively all of us in the industry have been working together to accomplish is seeing results. Now, the game theory here with public policy is, as more politicians talk about this and understand why Bitcoin is important to American voters, the more others follow as well. It's not a partisan issue, right? And the polling supports that. Bitcoin holders, cryptocurrency holders are evenly distributed across political affiliations. So what we've seen here now through Nashville is President Trump, the former president and current leading candidate to win the election this year, has come out with a very pro-Bitcoin stance. Does that mean it's necessarily a Republican issue? No. What we've seen in response to that is all these other lawmakers now really understanding the value of this because the issue has been elevated and getting behind it as well. That's what our goal has been. Bitcoin is not a partisan issue. If anything, it's a generational issue. And I think we should thank all the Bitcoiners out there that have been orange pilling their publicly elected parents, lawmakers, senators, congressmen, getting them understanding the value of this whole space and seeing the changes that we're making. So, there was a strong Republican presence in Nashville. It is a red state, but there were Democrats there that we work closely with supporting Bitcoin issues as well. There's been a number of champions on both sides of the aisle, and I think that was just historic for Bitcoin. I could not believe, I know expectations were really high going into Trump's speech. People are hoping that he's going to announce we're buying millions and millions of Bitcoin. I think it's important. These things take steps, right? There's not a home run right out of the bat. That wouldn't even be credible. I think what we've seen over the past several months, and it was touched on in the CNBC article about the Trump presence in Nashville this morning, but it talked about how Trump's attitude around this has evolved over the past month. First kind of learning about it, asking questions, getting input from the industry and different advisors, and then to his speech in Nashville, now a full-on outward advocate, talking about wanting Bitcoin businesses to be in the United States, talking about why Bitcoin is important, talking about why self-custody is important, talking about wanting the United States to be a mining superpower in the world. This is all very, very positive to me. You couple that with the bill that Senator Lummis introducing a Bitcoin strategic reserve. Now we have multiple branches of government that are singing the same tune. This is the direction we want to go. So I'm incredibly happy, and I'm looking forward to the day when Bitcoin is not an issue, because it should not be an issue. Everyone's behind it.
Aren't we all?
Just a quick add on there, Jason. What do you think of the latest update from Yahoo Finance with regards to the miners?
Yeah, that was crazy. So I saw Tyler Page's tweet, and I didn't even realize it myself on us. And then I went to go, because we were earnings call yesterday, so I went to go look. Hey, was our press release impacted there as well? And it was. And then it appears as if our earnings press release didn't get released on there either. So they have completely stopped taking cryptocurrency company press releases. I think that's crazy. I mean, at the same time, Yahoo Finance invites us on to want us to be on their show to talk about this industry. Maybe they're not going to do that anymore. That is just such backwards movement. This industry is a freight train charging forward, and this is a very weird decision by Yahoo Finance. I think it's embarrassing for them.
Feel safe that we'll always invite on our channel, Jason.
Thank you. Thank you. I don't know how much of a channel you guys would have if you decided you weren't going to cover cryptocurrency.
There you go.
We're filling Yahoo Finance gap at the moment, so don't worry, we're all on it.
I was explaining to Anthony this morning how big Yahoo Finance is in North America. That's my go-to, and I noticed there was no press release this morning. So we actually, guys, quick plug to the website. We're updating a dedicated news feed for each of the tickers on the website, Power Mining Analysis, so you can still have that one-stop shop. Now, Jason, RIOT has definitely taken a leadership role in the regulatory political environment, as you alluded to, kind of a thankless role. There's no revenue associated with it. We actually just locked in an interview with Dennis Porter from the Satoshi Action Fund too, and it's extremely important work these groups are doing, but a lot of times it goes under the radar. So I just wanted to recognize that. Now, secondly, we wanted to get into earnings. So Anthony and I have widely forecasted this is going to be quite a rough quarter for the miners. Obviously, hash price is down. There was the halving. There was a number of kind of headwinds to the sector. Riot being the first one to come out here with your report, I wanted to see, in your opinion, what are some of the key highlights from Q2?
So Riot, as you noted, tough quarter for the whole industry here with the price of Bitcoin going down. So especially those miners who hold Bitcoin, while we're up for the year with the new mark-to-market guidance, we are now down for this quarter because Bitcoin went from, I forget the exact numbers, I think from 71,000 at the end of Q1 to around 62,000 at the end of Q2 here. So for us, that was a $76 million loss there. So the quarter we had an 84 million loss. What I think is the important story about our financials, though, is what we demonstrated on a direct margin and a cost per Bitcoin basis. The story has been that we have built this large company that we are now rapidly scaling our hash rate into. And Q2 is just barely did we get the benefit of that because Corsicana just really came online, a substantial amount of hash rate, at least towards the very end of that quarter. So the story for us is just getting started there. But what we demonstrated was our direct cost per Bitcoin was 25,000 per coin. That's up, only $2,000, so less than 10% from the first quarter of 23,000 per coin. That's despite the halving, which effectively doubles your cost per coin, and that's despite I think it was about a 9% increase in difficulty. What that shows is our power strategy, the low cost of power that we've achieved, is scaling linearly with our hash rate, while the other costs are either constant or not scaling as much. We believe as we continue to increase our hash rate here, and assuming broader Bitcoin mining economics remain the same, or fingers crossed, hopefully improve. We're at about historically low hash price right now. That will show an improvement in our financial results. Those conditions are met as time goes on as we scale up here over the coming months. So I think this is the first glimpse of this. I think it's important that we showed that direct operating performance, and without that mark-to-market loss, and eventually cleaning up some other parts of the legacy hosting agreement, we would expect to see improvements in our financials in the future.
Okay, so that's really good. Just to take that a stage further. So, with regards to your gross mining margin, which is what you're talking about there, your energy costs. I know the credits get reported below the line. That's a regulatory practice, but you're close to 14 million of energy credits in the quarter. Would that be all against mining, or is that a portion against all business services?
Yeah, that's all against. That's all to the benefit of mining. And let me talk a little bit about that, so everyone has the background. You're an accountant, Anthony. You know the story, but let me give everyone the benefit. So, when we execute our power strategy, we get credits against our power bill that lower our cost of power. It lowers the amount of money every month that we have to pay our energy provider. However, just the way the accounting rules work out, those aren't a offsetting cost under cost of goods. They are shown on a separate line item, which we call power curtailment credits. So to truly determine what our realistic cost of goods are, you have to net those power credits back in. Now, in previous years, when we had a data center hosting segment, for segment reporting, what we would do was allocate those power credits amongst the segments based on what percentage of the overall power each segment had, what percentage of power self-mining was consuming versus what third-party hosting clients were consuming.
A fair apportionment method, yeah.
Right. That's what we were doing for segment reporting. However, our hosting customers were not entitled to those benefits, and only Riot actually received the benefits of those. That's just how it looked how it was presented for the purposes of segment reporting. That was the appropriate way to show it. Now that we no longer have that data center segment, now the power credits can appropriately and more accurately just be allocated entirely to Riot self-mining. So now we are getting the full benefit or demonstrating the full benefit as we present our financials like we really always should have been.
Okay, so in that sort of you've got two business units there. You've got the self-mining, you've got the engineering, but you've also got this other column now called other, and
Yeah.
that's sort of like so just to give a bit more transparency in what's included in
Yeah.
other, because you
Let
have
me
other
talk about
revenues of just
what
over
happened there.
4 and cost close to 10 million. That's sort of like that causes like, what is the other bit? Is that part of the hosting that you're still doing, or having to still pay? And actually, I suppose it's tied into where are we with hosting at the moment? So if you can wrap that into one answer, that'd be great.
Sure. So this new line is entirely third-party hosting. The revenue is third-party revenue. The cost of revenue is energy provided to that third-party hosting client. That's all that is. Why the change from Q1? In Q1, that was baked into just Bitcoin mining revenue and Bitcoin cost of revenue. In our earnings deck, we described, hey, this amount of revenue you should consider for third-party hosting, and under cost, hey, this amount of cost was for third-party hosting customers. This was a change that our auditors advised our management team was the appropriate way to handle it. So it was a shift from one quarter to another. No change in strategy or business or anything like that. It was just a change in how the financial reporting was recommended to be handled. All of our third-party hosting agreements have been terminated. We terminated these agreements in 2023. One third-party customer remains operating while that whole case is in litigation and dispute. We have to continue operating them until this is resolved. I can't offer you much more commentary than that. Unfortunately, it's ongoing litigation. It's unpredictable. We have to see how this plays out over the course of action here. But that's where we're at. Third-party hosting, all the agreements have been terminated. One of the customers is continuing to operate. They are the third-party hosting revenue and cost of revenues in that other line.
So can we assume then, obviously, that hosting business that you're having to continue while you go through litigation is effectively not a profitable business for RIOT themselves, because the revenues are like half the cost at the moment, and that's just in terms of direct costs. You'll also be applying effectively a part of your G&A cost towards that, because I'm assuming you're still having staff managing that sort of like that position while the litigation is ongoing.
Correct, and we're incurring legal expenses with outside counsel related to this ongoing litigation. One of our core complaints in our litigation is that we are not being paid what we believe is owed, is called for under these agreements, and I think you can kind of see that in the financial results here. So that should be expected to continue until this is resolved. Once again, unfortunately, litigation is unpredictable. Can't give any assurance on the timeline or how it will play out, but we have to allocate expenses to that litigation, and that's reflected in our SG&A.
So while you mention SG&A, that's probably another major question, another insight, because if you look at the SG&A cost of the total, 61.2 million, that's effectively like 87% of revenues, and we're not including electricity at that point in time. So I know within the G&A costs you have an element of the stock compensation, but from a G&A, from the G&A, which is predominantly like the payroll and other types of costs, like maybe legal costs, professional fees, maybe marketing costs, it has increased from the previous quarter. So, and obviously revenues have dropped from the previous quarter. Can you give some sort of like insight as to, the reasons for the growth in that before we sort of like start touching on the stock compensation side?
Sure. So, like you noted, the majority of SG&A expense is stock-based compensation, non-cash expense. Cash expense did increase slightly quarter over quarter. The reason for that is some increase in legal expense, but we've also had a number of one-time expenses related to M&A advisory fees. You've seen what RIOT has been doing. You see now more as things become public. We're working on things behind the scenes. So, for example, what we have going on with BitFarms, we're incurring M&A advisory fees around that. That increases SG&A. we did have a mark-to-market unrealized gain of about 24 million on the BitFarm's position during the quarter, but there's some costs behind the scenes to get the right advice through that as well. So these type expenses, these M&A advisory fees are not ongoing expenses. They are generally there's advisory fees just to try to get a deal done. If a deal is done, there's a success fee. Those are temporary in basis. So you could expect to see when we are successful with M&A that there's a one-time expense, one-time elevation expense, I should say, paying success fees for these type of transactions. So I think that was the core driver quarter over quarter of the increase in cash SG&A.
Was there any sort of increase in staffing at the Corsicana site with regards to build there, or is that pretty much linear through the 2 quarters?
There's always general corporate growth going on. So there's corporate hires that are occurring all the time to help staff up and make sure we're very built out from that perspective. Not to go on a brief tangent here, but I will. Riot's invested a lot in building out its accounting and financial reporting capability. That's why Riot is able to report its financials a week early. That's why Riot was, as far as I'm aware, the only Bitcoin miner with a clean audit opinion. No material weaknesses, no significant deficiencies. And Riot is the only publicly traded miner with a US Big Four accounting firm auditing it. This is because we've invested a lot on the back end of this kind of stuff. For your question on Corsicana, yes, there's increase in staffing on that site as that site has come up. Those costs you will see reflected in cost of goods for mining, though. Cost of goods for mining is not just energy. It's compensation, it's insurance, it's equipment repairs, it's ground rent, property taxes, water, networking. There's a bunch of expenses that go into that. And I want to highlight that because the difficult thing for you analysts is not all Bitcoin miners are reporting costs the same. Some miners, some big miners, their cost of goods for mining is only energy and an internet bill. Other miners like Riot, have a lot more cost in there. So it's very difficult to make, kind of a one-to-one comparison right now, while I think the industry is kind of figuring out the right way still.
It's a good point, Jason. I mean, I don't tend to use the margin as much because I know that you're not the only ones that include some direct staffing costs in that cost. Some of the other companies do that. So, but at the end of the day, the income statement has all the costs in there. So when I do a sort of like a full cash cost, you might not get it in the direct, but you'll get it in the operating element. So and so I tend to try and do something where I can be as courteous to every miner by showing effectively the same number. So moving on to stock compensation, and bear in mind, Jason, treat us like 12-year-olds at this point in time now, because we see the sort of stock compensation. And I know I wasn't on the call in the previous update, and I know Bryce asked a question about stock compensation and was it front loaded at the start of the year, and the implication was yes. And then I sort of said, well, I don't think it will be. I think they'll have stock compensation every quarter. And it's a similar amount to the Q1 position. I think it was 32 million in Q1, just over 32 million in Q2. But I mean, to the sort of individual retail investor, these are big numbers. And can you just talk us through the process of how you sit around the table, determine what it's going to look like for the quarter or for the year, and then what has to happen to actually to achieve this compensation? It's not like you're going to get 32 million shared out now. It's a case of things have to trigger that. But retail investors will only see that number and they'll think, wow, this is a massive number. And you're not the only miner. Literally every miner has stock compensation. We sort of understand the reasons why they have stock compensation, to keep your goals aligned with the company's goals. But if you can just sort of explain to treat us like a 12-year-olds and just sort of so it's clear for everyone.
Yeah. So in 2023, Riot introduced what we call our annual long-term incentive program. The incentive program is half time-based over many years, or about 3 years, and then half performance-based over a 3-year performance period. And there's targets for how Riot performs, share price performs relative to an index, and then there's overperformance that can be earned if the company way overperforms that index. This is an award we give basically every employee. So there are hundreds of employees that are participating in this. What we tell people is you are responsible for the success of the company, so we want you to share in the upside of the company and understand you are a shareholder and share those similar motivations and concerns. Alongside our Corsicana development, this is really critical for the company. This is, like we've talked about on this channel before, this is our massive growth pipeline that RIOT needs to succeed at in a big way in order to be successful going forward. And if we're not successful, that would be very challenging for the company. So we wanted to make sure everyone was very motivated over this key 3-year development period or so that we have ahead of us to build the site, build it rapidly, and build it at the highest quality and generate that operating hash rate that RIOT needs to be successful. In light of that big undertaking in front of us, we amended the 2023 award at the beginning of this year only on the performance side. So it's only on the performance side of this year. These are not guaranteed for any employee or me or the security guard on the ground. It is not guaranteed that they will win. It is only if we succeed in these performance targets. And in fact, the way the accounting works for this is the stock-based comp is expensed at as if we achieve the maximum result. So that is assumed, and then that is being amortized over all the quarters during the performance period. So if we are successful, then all employees will have an opportunity to then earn those shares, assuming they continue to be employed through that time period. If we are successful, we think that's also good for shareholders. The shareholders will have been inside RIOT stock and outperforming relevant indexes by a significant amount. How do we design the structure of these programs? Well, we work with top-of-the-line compensation consultants. We look at what major proxy advisory firms and institutional investors are looking for in terms of stock compensation structure, and we designed a program around that. That's the backstory of how we got to that. Once again, that is a non-cash expense. That is an expense that will incur during the performance period here. And if we are successful, then it will be paid out. If we're not successful, then the expense is eventually reduced. I'll note that is exactly what happened in our last performance plan. We had a performance plan we introduced in 2021. There was very big targets and very big goals. We did not achieve those goals. They were expensed up front, and then that expense was later on reversed when we did not achieve them.
And I remember having the conversation in those first goals about the hash rate and the EBITDA targets. But yeah, the clear thing that came out there is it's every employee working towards the goals of RIOT, and I suppose that's a sensible way to look at it. It's not just the likes of the CEO and the chairman and some of the C-suite directors.
Right, and I'll add, it's not easy building out all the administrative capability to give hundreds of people stock. People who don't even have bank accounts, some of them, we want to make them shareholders because we think it's very important that they feel the same as shareholders and they feel the same success and downturn based on how the company performs. So it's a lot of work and hires behind the scenes and infrastructure to make all of that happen. But we think that's very important to creating the right culture we want here at RIOT.
Yeah, appreciate the clarity there, Jason. And I think the confusion for me was that it's accrued up front, and I misinterpreted that for front loaded into Q1. So appreciate the clarity and the context. Now, one of the real highlights of RIOT is obviously the balance sheet. So nearly $1 billion of cash, Bitcoin, cash equivalents. This continues to really be a point of strength for you guys, especially as you talk about M&A. So can you give us a quick update on your balance sheet and the current ATM and how much is remaining or where we're at in that process?
Yeah, the balance sheet is a great tool with M&A, and it actually kind of ties back to one of the things we were talking about earlier, Bryce, of how we've invested in building out this corporate functionality in RIOT. So I'm sure we'll talk about block mining acquisition later on, but when we do an acquisition like block mining, then we're able to fold that in. They immediately have all of our HR, IT, accounting, legal, corporate development, FP&A, all these departments are now their resource to help them do what they need to do, and they can just focus on what they're best at: building infrastructure, operating hash rate. There's a case where there's capacity available. They have older fleets of miners operating currently. There's more capacity becoming available as hosting customers fall off. And there's the ability to develop a pipeline of growth. Riot's balance sheet immediately goes to work to making that growth possible. And now we benefit from the economies of scale of growing out there. That strong balance sheet has always been a priority of ours. And that is what has enabled Riot to be consistent in our strategy. I can think back to early 2022. Riot had a strong balance sheet back then. The Bitcoin market was in absolute disarray. We went from 69,000, we were crashing down to 25,000. There was different firms outside of Bitcoin mining going bankruptcy. Different Bitcoin mining companies were on the fringe. There was all sorts of decisions had to be made. And what did Riot do? We announced we were building Corsicana, and we were making the long-term purchases necessary to make that happen. And even other people in Bitcoin mining were calling me up. And they were saying, Jason, you're crazy. Why are you building a new facility right now? Just hunker down and weather the storm. Bitcoin mining doesn't work like that. We need to always be building and creating pipelines of growth for us. And having the strong balance sheet allows us to weather that storm and always be in a position to scaling our operations, making accretive decisions, no matter what's going on in the market. I think there's some incredibly bullish tailwinds for Bitcoin right now. So many amazing things have happened this year, and we want to be growing now before the whole industry, if it takes off in a big way, that's when growth becomes more expensive and more difficult. So prioritizing that balance sheet is one of the three key pillars of our strategy, and it's why we're in the position we are to grow today.
Now, we'll get Anthony to ask a follow-up on Block, but we also wanted to get a quick update on the ATM there, Jason, and then maybe we can get into the Block acquisition.
Yeah, so ATM, during the quarter, we issued about 410 million. I'm sorry, for the 6 months ended June 30th, we issued about $410 million. Subsequent to the end of the quarter, we issued about 61 million. So we're very light on issuing the ATM. I know I just gave the 6-month period. We were issuing equity in the beginning of the second quarter, and you can see that it was kind of very light through the rest of the quarter, and then since the end of the quarter. But we have about 280 million remaining on that ATM right now.
And how much of that 280 million would you need to utilize to get your target by the end of the year, or are you sort of now into planning for 2025 with the ATM funds?
We are fully funded for our 2024 and 2025 growth as is. So when we're running the ATM now and issuing equity now, that is to help fund growth plans, beyond what we even have outstanding right now.
What? So without issuing,
and just to finish, it enables us to be holding on to more Bitcoin as well.
So not counting the Bitcoin, you've already literally paid everything. You've got enough money on the balance sheet to pay for miners that you're going to be installing over this next 18 months, yeah?
Yes, we have in our earnings deck, we have a slide, pull it up. I won't share my screen, but slide 16 in the earnings deck on our website. We break down our cash position today, our Bitcoin position today, what our estimated Bitcoin production would be, the cost to achieve that production, and all the different pieces of our growth plans to the end of 2025. And with all of that netted out, we're still in a positive liquidity position with where we're at today.
Yeah, that's good. I mean, and that's the clarity that I think shareholders.
We've already received, or Corsicana, we've already received most of the miners that we're deploying at Corsicana. Yeah. There's still some deliveries to come, but for Corsicana building out, a lot of that has already been accomplished. And now that we have block mining, there's some additional expenses to get to the 2024 growth target. But from a balance sheet perspective, we are very well positioned to execute on our growth plans for the next 18 months.
As you mentioned, Block there, just very briefly tell us what that brings to the RIOT platform family in terms of power, in terms of operational hash rate, in terms of the future over this next year or so, as you're going to grow those facilities in Kentucky out.
Yeah, the acquisition of block mining, we're very excited about. This is an extension of the RIOT strategy. Our strategy is to find low-cost power, build Bitcoin mining operations, and be able to demonstrate that efficiency of effectively purchasing Bitcoin at a discount to its market price. That's what you're doing in mining when you are an efficient operator. So historically, our operations have been in Texas. We saw the value in expanding to other creative jurisdictions. That's very similarly as to why we expressed an interest in BitFarms. With block mining, they operate in Kentucky, a very Bitcoin mining friendly state. They have a very talented team there that's built something in a pretty quick period of time, and they've demonstrated strong operating performance, and they have a pipeline for more growth. The current pipeline is around 305 megawatts. They can build that out to, and that's what we're going to do together as one team, a part of RIOT. So they have our support now. They have our corporate support and our balance sheet, and now those guys are RIOT team members, and we're enabling them to keep doing what they're doing, building out and using their local relationships and demonstrated progress to hopefully secure capacity even beyond that 305 megawatts. We now have this division in a new region that can continue to expand, and as a result, we've increased our 2024 year-end hash rate target to 36 exahash, and we've increased our 2025 year-end hash rate target to 56 exahash.
Yeah, it was a privilege actually at Nashville to get to meet the new members of RIOT from the block team there, and having been in that meeting room for an hour with the questions from the Wall Street guys and a couple from myself, you could see they were sort of like they were happy to be part of the big family now and grow together. So yeah, kudos to you.
It's a great team. It's a great team. I'm so excited about just more teams of people doing what they're good at, finding growth, hunting it out for themselves, and then continuing to build this. So now I think RIOT had a reputation historically as this Texas Bitcoin miner. Well, I mean, we weren't Texas only. That's just where our opportunities for growth were at that time. We are eventually a global Bitcoin mining company, and we're going after where we can find these right pieces of capacity and continue the strategy, continue to scale, and to deliver accretive results.
So yeah, I mean, obviously, on the front page of the 10Q that came out, that tells us our the number of shares that are outstanding for the company at 303 million, and it's obviously linked to the fact that you've utilized the ATM to get to where you are. But I suppose people who bought the stock maybe a couple of years ago, maybe higher than it is at the moment, are still waiting for that sort of time when their time will come to see some of the benefit from them, and they see sort of update after update. There's more dilution, which take a step back. It's growing the company, but I suppose from a retail investment side, some of them will be disappointed that they bought into a share price that was made at the time when there's maybe 100 million shares. Now we've got 303 million, and sort of like, what message can you pass to those sort of like retail shareholders who bought maybe a couple of years ago and sort of like still waiting for their time to come?
Yeah. So that first, I want to note that 303 million, the increase in authorized shares. The increase in issued common stock. That does include issuance from the at-the-market offering. It also includes this acquisition of block mining. Stock was the primary consideration used in that deal. Those guys wanted to be RIOT shareholders. We love it, and so that was a big part of the increase that got from I believe 282 million at the time we reported the Q1 10Q to 303 million as when we reported yesterday. So when RIOT's issuing equity, all of this is growing to build these operations. Now, admittedly, there has been a lot of time to get this, right? We built out Corsicana that had a large upfront expense. We've purchased a 20 exahash of miners so far to fill Corsicana and elsewhere, and that is just now starting to come online. We showed a very significant increase in deployed hash rate in June of this year. We went from just a little over 14 exahash to 22 exahash in 1 month. So while most of it was actually installed at the very end of the month, we're seeing these big increases come online now. So I appreciate everyone's support alongside this long journey. I know it has been a long one, but we are now finally seeing the results coming through. And that's why, RIOT is seeing and forecasting these very significant hash rate growths over this year and the end of 2025 as well. For 2024, RIOT is planned to increase its hash rate by 193%. RIOT was already one of the largest miners. We're increasing by 193% this year. And then from there, our current plans are to increase by 56% in 2025. So all of that work from the past is starting to bear fruit. And I'm very optimistic about what the future is going to hold here.
Yeah.
Now, Jason, I asked you this one in person, but when you talk about these revised hash rate targets for year end and next year, those are operational hash rate goals, correct?
That's right.
Okay, and then a second quick one for you. You just mentioned all the new machine purchases and backfilling your facilities. In terms of Rockdale, can you get an update on timeline until when all of those machines are replaced?
We've been very busy at Rockdale. Obviously, it's very hot right now. This is the most challenging time to operate, no matter what conditions. It's reaching over 100 degrees Fahrenheit every day. I don't know what that is in Celsius. Sorry, guys, but over very,
it's a lot.
very hot. We've seen a significant amount of these new MicroBT miners deployed, and they are performing very well. We didn't make this decision arbitrarily. We tested these for some time before making this decision, so we knew what we were getting into, and we are very pleased with the results that we're seeing there. Alongside that, we have a number of projects, many different projects to improve operating performance at Rockdale. We're improving cooling in the different buildings. We are improving the electrical infrastructure in different buildings. All of these things are going to be helping to improve uptime. The list is very long. We've deployed most of those new miners, and these other projects alongside that are underway as well. So we think particularly through the end of the summer here, you're going to start to see a meaningfully improved operations out of Rockdale.
I'm assuming that, with you saying the weather's hot, I'm assuming the fact that you're probably in the summer months there, you're curtailing more than you are in those months outside of summer, and therefore you're benefiting from the credits and from the sales. So
and participation in the 4CP program. And I don't mean to change topics real quick, but that 4CP program curtailing during those hours, that saves us on transmission costs. So we have that benefit at Rockdale. We actually aren't benefiting from that at Corsicana yet. We are paying those transmission costs because we have not operated long enough to get the benefit of 4CP. So despite that, we're still achieving that low energy cost out there, which is really optimistic. We put in our Corsicana investor tour deck, we had a number of slides about the power strategy. So would encourage anyone to go to our website, check the investor relations presentation section to see that in more detail. But we talked about how, if you back tested M60S miners over previous year's power prices, for example, 2023, if you curtailed 3% of the hours of the year when you were above break even, then you'd achieve, I believe, a $31 per megawatt hour cost of power, 3.1 cents for cost. It's only 3% hours of the year. Those hours, however, are mainly weighted towards the summer. So while the overall year is only about 3%, it's very, very minimal. We see more of those hours in the summer. And of course, the more challenging operating conditions in the heat. But we are fighting through all of this. Especially at Corsicana, we're very encouraged about what we're seeing as more and more hash rate is operating here.
I mean, look at last year, you actually, when you put your power sales and demand response credits on your monthly updates, You could sort of like do a calculation of a BTC equivalent to sort of like where you had low production because you were turning machines off, and you sort of got this boost then from the power sales. Are we sort of likely to see that in July and August, probably the two hottest months of the year?
Well, you have to stay tuned for the monthly operations updates. The most I'll say, I'll give you for now, Anthony, is hash rate is going up, and Bitcoin production is going up alongside
That was a question. That was definitely a question we were going to answer.
Yeah.
Yeah, because we just had one miners release today, and they had a similar issue to you guys in the fact that they'd installed a load of machines at the end of June, but their operational hash rate was about 2 or 3 away from that, and they've just updated today. They've nearly got to the full amount. So we're fingers crossed that your gap of about 7 or 8 exahash in between June and July should start to close considerably, and even more so in August.
And you know, there's ongoing improvements that are happening here. To give you some kind of color, we install this hash rate. We're trying to get all these machines plugged in, turned on as quick as possible. Then there's optimizations that happen from there. We determine, okay, we're changing some settings on the immersion equipment. Oh, the electrical kind of hierarchy of equipment, we're doing some tweaking there. So there's some different pockets of downtime, but that's because, you know, we put 100 megawatts on. I can't, understate. You guys saw the buildings in person, how much is coming online at one point. And we're trying to get that on as fast as possible. And then once it's on, we find these areas to optimize, and then that operating hash rate just continues to improve and improve as those optimizations are completed.
We've certainly tried to tell that story since our visit to Corsicana. Through the different media channels that we work with to get that message across there, because it was mind-blowing to go to that site and see it firsthand.
Yeah.
Thank you. I have challenges getting both of my monitors plugged in some days, Jason, and you guys have the Matrix set up there in Corsicana. So very interesting. Now, we'd be remiss if we don't ask about the BitFarm situation. I understand there's obviously things you can share and not right now. We've got the special shareholder meeting set up. It looks like you're now able to increase purchasing shares up from the 15% to just shy of 20%. So can we get a quick update there?
Sure. So after RIOT made public its proposal that we had made to BitFarms, and it's important for everyone to know that proposal was never being tendered to shareholders. We didn't have really an outstanding proposal. We eventually clarified that. That was an example of how our engagement with the BitFarms board went, and how it led us to the concerns that we had. So following kind of some back and forth between the BitFarms board and RIOT, they implemented a poison pill, as it's known, with a 15% flip-in provision. So if any shareholder, if RIOT specifically really, any shareholder they did not approve of, increased over 15%, it would be massively dilutive to us. So it's not something that you would ever do. Alongside that, there was a provision in that poison pill plan that would allow the BitFarms board to issue 25% of equity to someone if they approved of it, and then that person could be over 15% without having the same dilutive consequence. We saw this poison pill as another example of board entrenchment. They did not want their board seats necessarily jeopardized, and they wanted to prevent RIOT from accumulating stake over 15%. So we challenged that in the Ontario Securities Commission Tribunal, and we were successful in getting that tribunal to cease trade that pill. We recently filed a new 413D that's shown that we've increased our stake since that decision has been made to 15.9%. We requisitioned a special meeting of the shareholders. The BitFarms board has scheduled that meeting for October 29th. So we've nominated 3 candidates we think are very experienced, highly qualified to serve on the board here, and completely independent from RIOT and BitFarms. We have no control over these individuals, and we think they can address the corporate governance concerns that we have if they are successfully elected. So there's not much to update on besides that, and there won't be much to update on until that special meeting has concluded.
Hey, now quick follow-up there, Jason. On the shares that you accumulate, the 15 up to 19.9% or whatever, as long as you're have those shares on record date or before record date, are you able to vote as part of that special meeting with your RIOT shares?
Yes. So any common stock shareholder as of the record date of that meeting would be is eligible to vote in that meeting. So yes, RIOT can presumably be voting in that meeting.
Sure.
Just moving away from BitFarms, and because that's a good update on where we are at the moment. And we're not going to ask you the question that every analyst wanted to ask you about HPC, but maybe turn the question around and say, I mean, you're one of the few pure play miners now. You want to be the biggest and the best Bitcoin miner in the space. Where do you see at the moment? Where do you see the HPC space for those that are going down that route? Because we had that one major update from Core Scientific, which everyone, I mean, to be honest with you, it was probably the biggest news story of the year. And you know, it did affect the landscape. It did affect the conversation currently. And you know, we all appreciate once the Bitcoin price gets to anywhere near these targets, maybe end of this year or next year, that people are anticipating the conversation refers around to Bitcoin mining. But what are you sort of like seeing yourself? Are you seeing it might have been oversold this side of it, or are you seeing actually there's enough potential? You're still fielding off questions from maybe people wanting to utilize your power. Just give us from your perspective, your opinion of the landscape at the moment.
Yeah, as you stated, Anthony, I think Core had a landmark deal with what they've had with CoreWeave. I think that got the whole industry excited and talking about this. I think the extent to which that deal can be replicated is what's yet to be seen. I think we've seen a lot of companies receiving near-term appreciation in their share price as a result of expressing an interest in entering this space or initiating plans to enter into this space. There's room for all of these industries, right? There is a big demand for power for AI HPC. To the extent a company has infrastructure and they want to sell that or construct whatever agreement to make that available to another provider who's going to utilize it for AI HPC, that's a perfectly viable strategy. And if they're able to replicate what Core Scientific has done, then they'll have a pretty good deal on their hands. We're trying to remain steady. Our long-term strategy has been around Bitcoin mining, and our belief is no Bitcoin miner has really perfected this yet. Everyone's going at it a slightly different way. We've talked about the challenges that RIOT has had and that we're working hard to overcome and starting to show results of overcoming that. And we think to be successful and make the most of what we have to keep that narrow focus. We don't have an AI HPC development capability. If we wanted to do that, we'd have to start building out new teams. We'd have to, start diverting focus and resources. We'd potentially be taking capacity that we would otherwise use for Bitcoin mining and put it down another direction. And if for some reason that direction wouldn't work out, then we'd have a bunch of expense to have to turn it back again. That has some risk to it. We believe the best long-term thing for our shareholders, we believe shareholders in RIOT are interested in Bitcoin and Bitcoin mining, that it is to continue focusing on this, improving our Bitcoin mining business, and trying to get to a much better place there.
Makes sense. Yeah, we've covered so much today, Jason. We appreciate all your comments and time. I'll throw it back to you for any closing comments or upcoming catalysts, but great insight today as always.
Yeah, thank you, Bryce. It's been such a big year for RIOT. Talking about Corsicana, we initiated that in 2022. And what we did with Corsicana was even in this first phase, build this platform to now where all this growth can go. So a lot of what we did in the first phase was not just about building 400 megawatts, but to make it simple to add the additional buildings, 100 megawatts each after that. So that was a lot of work to set the whole facility up to be ready for that, do all the land work, set up the lake, all the ancillary buildings around that. Now that is done. Now it's incrementally adding buildings, expanding the substation, and adding more buildings. And after all of those over 2 years of hard work, We energized in April. We got a significant amount of hash rate online in June. You guys saw it for yourself in person in June. And now we are aggressively pursuing moving forward there. I think you've also seen with our announcements relative to BitFarms and at the completion of the transaction with block mining, how active Riot really is in the M&A space. You don't see things until they're successful or have gone public, but behind the scenes, we have an incredibly talented team that is evaluating opportunities all over the place and not just looking at them, but diving into them in incredible detail. And as you can imagine, 90+% of things, 95% plus of things do not move forward. But we have our advantages with our corporate infrastructure. We have our advantages with our balance sheet. We have our advantages with our long-term purchase agreement with MicroBT. We have our advantages with the internal development team that we've built out here at Riot. And we believe that makes Riot an ideal acquirer for distressed assets or assets that may not be distressed, but they're looking to be a part of a bigger enterprise. Someone has perhaps later generation miners, and they're looking to be a part of Riot. We help upgrade and continue to grow from there. We think we have incredibly excited growth opportunities in front of us. We have a strategy we're executing on, and we're very, very excited about showing those results as a result.
Well, there you have it, folks. Riot Platforms Q2 in the books. Jason, we look forward to the July production result and subsequently Q3. Thanks for your time today, Anthony. Always a pleasure. You guys, if you're still watching, smash the like button. Feel free to subscribe to the channel. Let us know in the comments if you're holding shares of Riot, what you thought about Q2 and your outlook for the back half of the year. Jason, thanks so much. Congrats on the quarter, and we'll talk to you soon.
Thank you, Bryce and Anthony.